Hello friends, welcome back. So today we will discuss about the global indexes. In the global indexes, we will first of all discuss about NASDAQ and then we will discuss about the Dow Jones Futures. So these are the most important indexes in the global scenario. These are listed at the New York Stock Exchange. So what is most important in the NASDAQ future is that the NASDAQ 100 is making a similar pattern which is related to the Tata Motor. So by looking at 2016 Tata Motors chart, this similar pattern has emerged. Okay, so this one is a stock chart, so we can say that it's some little bit variant from that. But overall, if we have to look at the stock, it's a similar pattern. Okay, so let me expand that. It's the similar W wave pattern. So in Elliott wave terms, we call it as a one and then second. So similar thing happened in the NASDAQ, that is here. Okay, so it's stock. If we talk about in the terms of percentages, then in terms of percentage, it also plumped almost 50% from their previous high, right? Similar is with Tata Motor. It has plummeted 50% and NASDAQ has almost plummeted 60%, 50%, sorry. So if we have to look at the minute details, then let's talk about Tata Motors chart first. So what you will think happened afterwards there? Okay, so after making an high of 600, around 600, it's make a high, and then in a second wave, it made a high of 580. What do you think Tata Motors chart reacted? Okay, so let's see it there. It's plummeted almost here up till 2020, that is the crash in the stock markets happened. It plummeted towards that. It goes on correction. Okay, so it corrected almost 600 to 51 rupees from 600 to 51. Okay, so we can say that it's a stock chart. Okay, so it can correct to that extent, to the extent of 99%, 98%. But in terms of index, we can't expect that. It's okay for a time period. We can say that we can't expect in terms of indexes. But if that similar pattern plays out in the NASDAQ, that is important index. Okay, so what do you think will be the next level in the NASDAQ indexes? So we can almost say that let's assume about 60% correction. Okay, so either we can say correction. I think the economists will term it as a bear market. Okay, so if we can talk about a 60% correction from here on, then we can say that it will be corrected towards the level of 6,000, and that is here. That is the previous 2020 lows, 6,000. So we can expect a NASDAQ around that kind of levels, although it may come in between 4 to 5 years. But yeah, these are the possibilities which we have to think about, because now the simple things are coming out that there is no recession but depression. Okay, so depression is a larger term. We will come up with video in relation to these terms. Okay, but for the time being, just discuss about NASDAQ. So for the time, just be at the corner and just analyze the market first before expecting any bull rally. Why I'm saying that, we will discuss these indexes and then you will realize that yeah, in the global scale, there are not any possibility showing in the indexes at the indexes level, at the global participation level, that a next bull rally can occur in the coming months. The similar pattern here occurs also, and that is too sharp. That pattern occurs too sharp because of news and as well as because of the participation of Apple and Tesla stocks at the Dow Jones, because they have reacted so aggressively at the upper end of their range because of the positive news flow. That's why that kind of spike we have seen at the Dow Jones. I think we should have to look at the further charts. Okay, and also there. Okay, let's just talk about first. It's a weekly chart, and again at the Dow Jones, it looks like it is making a peak here. Okay, around the levels of 35,500. So we should have to look forward, okay, instead of making any assumptions, because if we have to go through the New York Stock Exchange sites, the option data is also showing that there are peak at the Dow Jones at these levels. And so whenever the 33,600, 500 range broken and it closes, I think the levels of 32,000 will become open. So for the time being, just be calm and just take on the sidelines whenever you want to invest it globally. Let's see the chart of Switzerland. So in Switzerland, this 5 wave rally, and afterwards it's just corrected from here. And these are the levels whenever Indian indexes are also corrected. So at the global scale, you can see that while our indexes are making new all-time highs, but at Europe, the chart is just making a correction points. So we can see here also that there are signs of exhaustion in the Switzerland indexes. Hang Seng, uh, it has an index, it has a greater importance because Hang Seng in China opened before Indian markets, and the Hang Seng, China, Singapore, and Japan, whatever direction the indexes gave, most of the time our Indian markets reacted on these global cues at the morning because these plays very important role. So and had at hand X index, we can also see that after a basic correction, it just goes on a sideways rally. Okay, so we can say that it's a sideways for the time being, but again, there are no signs of any again the starting of a new bull market here. So we can say is that at the global there are many large worries which are just now occupying the global chaos. So let's just see the Japanese. Okay, so this index we can say this one is an exception. There is no doubt that they after making some correction like 2205 or 2053, we can see the levels around 2340 in that index. So afterwards there is no any signs of any again new bull market in Japan also. So we can say that there is maybe last rally, there are chances, there are very high probability chances that we can see a new last jerk up push in Japanese index. Then we can see the index to be corrected around the levels of 1900 or 2000. So that's it, friends. I think you will like our video. So this one is related to the global indexes and what is the importance of the chart formation whenever we have to see the chart, then we have to compare the charts like this one here is a complete, a complex, and their formation that we see. There is an exact example which is in index and Tata Motor we are saying. So let's just see whenever you see the charts, just look at them carefully and just try to remember them. Okay, it's important to remember the pattern of the chart because human psychology represented through this chart, the trader's psychology represented. And whenever the trade happens, and there is a verb which is very famous that the history repeats in itself. So the history represents in the charts. So just look at them carefully and be uh, careful while investing for a long term in the global indexes. Whenever we talk about the India, just we can see a little bit correction in Indian markets also, but not that much which we can see in the global indexes. So be careful and continue your SIPs, whatever you are doing, continue your investments at Indian exchanges, but not do exaggerated trading and not keep your positions high in the upper for the upper momentum in the indexes. Okay, friends, thank you so much. Don't forget to like, share, and subscribe. Thank you so much.